Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we're going to take a look at the marine transportation sector. Okay, it looks like they're starting to set up for a little bounce here. We've got our RLOG did find support on Friday. It came down. Okay, so it ran up to 190, and then it had that nasty gap down open, and that was followed by a pullback. And on Thursday, it bounced off this blue line, which is the 300-day simple moving average at 63. So that is the key level to hold. That is now lined up with EMA 13 and also the top of this previous channel. So 63 is the big support level. If it drops below that, then that would signal downside risk. You could see this gap fill down here. A drop down to 51 would fill the gap between these two candles right here, so between the 6th and the 7th. And so to the upside, what needs to happen is it needs to close above EMA 4 at 76. So a close above 76 will signal that it's back in play, ready to head higher, and then we'll be looking for a run potentially back up to the upper Bollinger Band and to test this opening price up here in the 120s. So our LOG is setting up. You've got a green volume bar formed on Friday, and then it's forming. Notice how it formed. Two dojis in a row, almost a doji here. On Friday. Those are both bounce candles, and then so you're looking here at the Bollinger Bands on the 15-minute chart, and notice how tight they've become. Super tight Bollinger Bands over here. So this is signaling that a move is imminent. All right. So look how wide the Bollinger Bands were back here on the 8th, and the Bollinger Bands have become super tight. This is signaling a move is imminent. So a break above 73 is going to signal it wants to head higher, and we'll be looking for a run up here to the 100 simple moving average at 90, and then a break below. Notice how it closed above the green line in the middle Bollinger Band, currently at 70 and 71. So a break below 70 is going to signal that the chart is could break lower, and then 69 is the big level. If it pushes below that lower Bollinger Band, that's going to be a signal that the 200 simple moving average is on deck. It could drop to 66. If it breaks 66, 55 is the next big support level to hold. A drop down to the 50s could fill the gap that was created back here between the 6th and the 7th. So a break above 73 would put 90 on deck. If it can get above 90, that would signal it's ready to get running again. If it drops down below 69, it could test 66 and possibly the 50s. But those tight Bollinger Bands are signaling that a move's imminent and that it could be breaking out on Monday. So keep an eye on it. And then if you look here at DCIX, it had a 4-day pullback. So notice that it has a declining volume pattern, and so the volume has gotten very, very light again here, and so it signals the sellers have tired. Now it just needs buyers to push through that EMA 4 at 1142 resistance. That's the big level to break. It needs to close above that level to head higher. If it drops below EMA 8 at 1034, that's the lime line, that's going to signal downside risk, and you could see a drop down to the 50-day simple moving average in the middle Bollinger Band. We'll be looking for to the upside is the closing price here on the 6th is the big level to break now, and it would need to get through that upper Bollinger Band at 16. So first things first, it has to break EMA 4 at 1140, and it has to hold EMA 8 at 1034. So keep an eye on DCIX. Like we said, it has been setting up here. It looked like it was going to break out on the 10th when it started the day above this green line, which is the 50 simple moving average, but the bears quickly took over and it pulled back. It held the middle Bollinger Band, and then it can't, and it's been holding this 200 simple moving average support level. Okay, and then it got back above the 50, and then it dropped back below. And so now here it is back below the 50 simple moving average and back below the 200 simple moving average. So the risk here is that if those levels turn into resistance or continue being resistance, then it could drop down to the next moving average, which is the 300 simple moving average at 887. That is the bottom simple moving average on the 15-minute chart. and should and that should be a solid support level if it's tested. Right now with this tight Bollinger Bands, it needs to break out to the upside. The top moving average to break is the 100 simple moving average at 13. So if it fails to break that level, that's going to signal more consolidation. So right now it's all about this green line. It has to get above the 50 simple moving average at 1130. Fail to break that level, and eights will be on deck. So keep an eye on it. Above 11 signals more upside. Failed to break, and then it could possibly drop down to the eights. Okay, let's look at GLBS. This stock is pulled back all the way back down to that middle Bollinger Band and the 100-day simple moving average at 103. And so those are the key levels to hold. You've got the middle Bollinger Band at 104 and the 100-day simple moving average at 103. And then just below that is the 50-day simple moving average at 98. This $1 to 104 level should be a solid support level. After the big run and then the pullback, these levels need to hold in order to get an uptrend going. You look for a bounce here off of the dollar support zone. If it drops below that 50-day simple moving average, it's going to signal more consolidation. After the super tight Bollinger Bands and then the breakout on big volume, you would think that GLBS would be able to get a sustained run. But as you can see back over here, back in April and May, it's not a stock to mess around with when it gets a downtrend going. So if it closes below the middle Bollinger Band and the 50-day simple moving average, it will be a risk to hold. Right now, it's on a bounce off of the $1 support levels radar. We're looking for a bounce off of that this week. As you can see here, it came all the way up, double topped, came all the way back down. Now it's back to where near where it started on the run, on the initial run back here on November 3rd. And so you can see here the initial break above resistance that got the whole run going was on this candle right here. And if you come across here, that's at about 97 cents. And so that's the bottom support level. If that's tested, you could see a bounce off of that. To the upside, what needs to happen, it has to get above this middle Bollinger Band, which you can see it's been failing to break above this dotted purple line and turn that into support, currently at 108. And then it's this 350 simple moving averages at 112. That's the next big level. If it can get above those two levels, then it could really get moving, and then you have the 200 and the 100. It's got a lot of work to do, but keep an eye on it. This is a full retrace. Sometimes they don't come back from this. So yeah, it's got to get back above the moving averages. Right now it's super bearish, and we're looking for a bounce. And then once again, you have another big pullback here for tops. TOPS had the gap down, multiple red candles in a row, and now it's hitting the key support level. It's right at the 50-day simple moving average in the middle Bollinger Band. All right, so currently 71 is the big level to hold. It's got to bounce off this level to keep this new uptrend going. If it closes below both those levels, it's going to signal that the chart's broken, and that there's downside risk, as you can see over here with the big pullback. You don't want to be holding tops long if it's forming candles below the middle Bollinger Band on the daily chart. Now if this level holds, this is going to be the good entry for the bounce play. It has to get back above EMA's 4 and 8, so 96 is the big level to break. Okay, look at DRYS. Okay, so this stock actually has an uptrend going here. It's got this good uptrend that started back here in October when it got above the middle Bollinger Band. Okay, so it came down, it bounced off the middle Bollinger Band level, came back up, and notice how it's making lower highs, and so that is a red flag here. Okay, so it needs to make a new high. It needs to now break above this descending resistance line to break this pattern. And what you have as well is you've got this triangle pattern here. You could call this a symmetrical triangle pattern. The candles are right at support right now. It's at the middle Bollinger Band at 403. It has to hold that level. Notice how there hasn't been a close below the middle Bollinger Band the entire time that this has been running, since October. And so, the last close below the middle Bollinger Band was back here on October the 27th. So, that there's, big bearish implications if it closes below that level. If it does, in the middle Bollinger Band turns into resistance, then we'll be looking at the 50-day simple moving average at 320. That would be the big support level. You would more than likely see a drop at that level if that middle Bollinger Band support level broke and turned into resistance. And so to the upside, if it breaks back above EMA's 4 and 8 here at 418 and 420, then you're looking at a potential run back up to the top of this channel, which now is at 470, and it needs to break above that in order to signal that it wants to head higher. You've got the high high close resistance level at $5. So $5 is the big level on the chart. And then if you look down here, you know, if it drops below this, the bottom of this current channel, you can see it's got this little channel going here. So yeah, this 380, you know, the below this 385 level is going to signal big downside risk. Okay, so let's look at DAC. Okay, so this stock is thinly traded. It only had 89,000 shares traded on Friday. But if you look here, okay, you've got RSI and Fasto both in the bull zone with room to run until overbought levels. So that's good. You've got this 100-day simple moving average turning into support. The candles are, that's the gold line here, currently at 163, and then you have candles forming above the middle Bollinger Band and the 50-day simple moving average at 148 and 154. Notice how for 4 days in a row this red line's been hit, the 200-day simple moving average at 173. We're looking for a close above that level this week to put that 300-day simple moving average on deck at 209. So above 173, it has to close above. Notice how it broke that level intraday but kept pulling back. It's the close above that signals it wants to head higher, similar to back here. This is the kind of move that we're looking for, the July type move. If it can break through resistance, this big volume spike here on November 7th is our clue that it wants to head higher. You know, the chart's wound tight here. This is yet to break out like these other previous runners, so it looks like DAC could make a bullish move if it can break through resistance. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.